Let's welcome to our virtual stage Romain Berthome, Group Project Manager at Booking.com. Hi Romain, how are you?
Hi everyone, doing great. Thanks a lot for the introduction. Super happy to be here today.
Lovely, thank you so much for joining us here at FinTech Live New York. And as they say, the virtual floor is yours.
Hi, thanks. Hi everyone, my name is Romain Berthome and I'm currently a group product manager at Booking.com, and I'm super excited today to talk about driving product growth with embedded finance. Before we jump right in, I wanted to introduce myself a bit more. I'm basically, a product manager at Hertz. I have more than 10 years of experience in product management. As I mentioned, currently group product manager at Booking, where I'm focusing mainly on two things: ensuring that all our line of business, accommodations, flights, cars, attractions, and so on, can basically sell their product or services to customer by providing them, the relevant payment capabilities they need, and as well working on maximizing the spending powers that travelers can have by offering them options such as pay laters or installments in their checkout journey on Booking.com. Prior to Booking, I had the opportunity to work at Uber, where I work as well on payments on both sides, on the payout and the pay-in side. On the payout side, I was basically overseeing for 30 billion worth of disbursement on a yearly basis, ensuring that drivers, couriers, restaurants all across the globe can basically seamlessly access their earnings and as well enjoy financial product offering that we were basically offering to them as, let's say, co-branded debit card, microloans, and all other embedded finance bet that Uber was pursuing. On the paying side, I had the opportunity to launch over 120 local payment methods at Uber to ensure that users could pay the way they want. And much more early on my journey, I started as a product manager at Rocket Internet to basically get my hands a bit dirty and understand what product management was. With that being said, I wanted today to talk about, embedded finance, and especially, provide you my views and some of the real life example that I had the opportunity, to experience or at Uber or at Booking.com. And I wanted to, basically, set the stage a bit with my own understanding on embedded finance. It's, really a buzzword, or one of these buzzwords that we have, in the fintech space with, crypto, blockchain, and all the other. So I wanted a bit, to demystify it at the beginning and then walk you through some real life example. So first of all, when we talk about embedded finance, what we see, I went, on the internet and I wanted to get, different views and perspective around how people do define embedded finance and how that's different from my definition. So what we see is, for example, Forbes says embedded finance is the use of financial service by non-financial providers, such as lending or payment processing. From my side, I personally don't agree with, with that definition, and especially on the payment processing part. I think we will see my own definition a bit later on, but I believe that embedded finance is more about financial products that you can offer to your consumer rather than just pure payment processing. And the way that I want to illustrate that is I want to walk you through two examples that basically, to me, illustrate really what embedded finance is. Embedded finance, we are hearing about it, we have been hearing about it more recently, but when you look at it, embedded finance is something that is not new. And actually, the first use case of embedded finance was in 1990, where Ford basically, with this famous, car producer that we all know, realized that, cars are an expensive items to buy for customers that are looking to acquire a car. And when, Ford started to mass produce all those cars and try to basically sell them, Ford quickly realized that, people were not able to have, or not a lot of people were able to have all the cash up front in order to be able to afford the Ford's cars. And what they started doing is they basically started partnering up with banks and basically saying, okay, what if at our shop, the seller could basically offer a loan directly, to the consumer. So we don't have to have the consumer running out of the shop and thinking twice about buying the car or not buying the car. This was the first case of embedded finance. This was the first case where a company added a financial product offering, here a loan, in their sell journey in order to facilitate the life of the customer for acquiring a car. And this has happened since 100 years. if we, look a bit, more recent in the history, another case that I would like to show you is, for example, ATMs in malls or in supermarkets. And what we see is that ATMs started to emerge in the late 1960s, where basically, supermarkets and malls realized that banks were not necessarily close to the supermarkets and that people were not having all the cash in hands that they needed before, the boom of credit cards and all those type of payment methods in order to be able to do their purchase. So again, in order to facilitate, really the customer life and the customer journey there, what they started doing is partnering with banks in order to start offering basically ATMs in various locations in supermarket and malls for customers to be able to withdraw cash and then basically being able to spend more in malls or supermarkets. And to me, that's really what embedded finance is. And it can take different forms. It can be co-branded cards, it can be those ATMs, it can be loans, microloans, insurance, or whatsoever. But embedded finance is really the integration of financial products in your own product journey to solve some of your customer pain points. And this is really the last bit, that I want to emphasize on. Solving customer pain point. Those, financial product offering needs to solve customer pain points for your own product and your bigger, let's say, customer journey. So if we have seen that, if we have seen that embedded finance is existing since 1919 and was existing basically more than 100 years ago, why is it so trendy? Why are we, continuously talking about embedded finance, and why so many people in the fintech world are looking at embedded finance? My personal take is there is two main reasons. The first one, and I probably have to acknowledge that I'm probably a bit biased with having worked at two big marketplaces, Uber and Booking now. I think we recently saw in the last 20 years the rise of super marketplace or super apps and basically like website or apps that have basically a global reach. And I think that basically facilitates the spread of those embedded finance play, because now they can be done at scale all across the globe, and basically tying that with the credit card penetration or the banking penetration together in the market, like in the overall global markets, that's basically helps seeing the penetration of those embedded finance play being accelerated. The second thing that I think is driving embedded finance and why it's making it a trendy topic, it's because I think the ecosystem, unlike 100 years ago, is way clearly defined now. Now, in embedded finance, you have three key players, and each of those players have a key role in the embedded finance journey. Whereas in 1919s, probably Ford had to partner directly with a local bank. Now, the three players you have basically a clear established roles, and that's basically allow you to scale way faster and bring your product to market way faster. And those three players are basically the bank, which is, the compliance and the regulatory framework provider. They are the one that have the license, that ensure that they are compliant, in terms of oath, in terms of oath flow, in terms of risk, and basically complying with the overall regulation. Then you have the BaaS, the banking as a service provider, which is more the technology provider here, which is connecting the retailer on one hand and the bank on the other hand. And they are really the one bridging the gap between, the retailer and the bank in terms of technology. While banks have been extremely good at, building a framework that is extremely compliant and that, is risk-free and so on, banks are, not the best for today's marketplace or today's companies in terms of technology, let's say, or being a technology provider. And basically, together, the BaaS and the banks can have a really competing offering for a retailer, which is that third party in that ecosystem. And the retailer on this hand is the consumer provider, is the one that is providing basically, those millions of customers to the BaaS provider and to the bank. And each of those basically company have a really distinct role and a different value within basically that ecosystem. By providing a lot of consumer on the retailer hand to the bank, this managed to bring the cost of acquisition from the bank down. By bringing, the entire regulatory and compliance infrastructure, that's allowed the retailer to go from the bank. That allowed the retailer to be way faster to market rather than if they have to apply for their own license, et cetera, et cetera. And for the BaaS provider in the middle, they basically are ensuring that, both the retailer and the bank can connect in a fast way, and they basically allow both of them to bridge the gap between both of the companies. So for those two reasons, the emergence of big marketplace at scale that have a global reach, and by better defining the ecosystem and embedded finance, I think it's what makes embedded finance more trendy and a topic worth exploring in today's world. What I wanted to tell you now that we have defined a bit more, the context around what is embedded finance and how the ecosystem is structured, is a bit of my personal example that I lived at Uber and at Booking around real life embedded finance play, and why did those embedded finance play had some success. The first one I wanted to start with is back from my days at Uber between 2018 and 2021, we basically launched what we call the Uber Pro card, which is basically a co-branded debit card that Uber offered to drivers in the US, in Brazil, and in Mexico. And what this card is doing is it's basically have three main, value proposition for drivers. The first one, cash back on gas up to 10%. The second one, 15% discount on vehicle maintenance. And the third one, because of the entire industry moving towards electric car, is as well some discount and cash back at charging station for electric cars. Fun fact, Uber had two co-branded debit cards, one for drivers and one for riders. And when you look at both products, they almost launch at the same time to market. Uber gets 10 times or even more than that, more success on their driver debit card product. The main reason for that is the driver co-branded debit card products have a way higher, let's say, focus on pain points for the customer. If you look at those 3 points here, gas, car maintenance, or charging, these basically solve a specific pain point for drivers, which is when I need to drive, 60% of my expenses are going to be on gas or on charging my vehicle. And if you can offer me any discount here, that's going to be like a direct impact on the profit I'm bringing home on a daily basis. Car maintenance is their second, expense bucket after gas. So basically by identifying, how a driver earns, how a driver make profits, Uber was able to say, okay, we understand what are the pain points in terms of expenses for those drivers. How might we basically help them there in order to ensure that we make their life better and they can bring more money home? And by doing all those partnerships and those rewards plan on this co-branded card, Uber was basically able to reach within 1 year 350K drivers only in the US, adopting that co-branded debit card and start logging it with the money they would make on a weekly basis. It was way powerful than the rider debit card that we had at the time, because if you just put yourself in the shoes of both users, from one side, a driver, you are driving on the platform every day and 100% of your earnings are made on the Uber platform. If you manage to save, let's say 10% or 15% or 5% out of your total expense, it's a huge number for you. But on the other side, if you are a rider and I power you with a co-branded debit card and I'm telling you I'm going to give you 2%, let's say, credits or cashback whenever you are spending on Uber, that's a little portion of your expenses on a monthly basis, right? And therefore, our driver debit card was solving a real pain point and got huge adoptions compared to our rider product. So focusing on your customer pain points is a huge factor that will determine the success of your product. The second example that I wanted to provide is around the Booking travel card. And you have probably seen a bunch of OTAs starting to enter the space of travel cards. When you are looking, for your next trip or your next journey, what we know is that about 30% of our users are booking for hotels or trips overseas, and therefore that means that whenever they are booking, their currency and the currency of the hotel or the accommodation might be different. While a lot of OTAs today allow, bookers to pay in their own currency whenever they are booking for their hotel or accommodation, they stop, the journey here. And what Booking thought about is, we know the percentage that you're spending when you are booking your property on Booking.com, but we know as well that there is a significant amount that you're going to spend during your journey traveling, whereas it's at restaurants, whereas it's for your museum tickets, whereas is, to rent a car or whatever expense might be. And therefore, we know that, going into those other markets and be subject to, let's say, FX cost every time you're tapping your card is a pain point for you, because you will end up paying extra fee that you might not want to basically be paying. That doesn't allow you to budget as well your expense and be in control of how much you want to spend during your holidays or your vacation. And therefore, Booking basically decided, okay, how might we extend our customer journey and basically not only solve that pain point at the time of booking, but ensure that during the entire travel journey for the customers, we are becoming a better partner and ensure that they can save money all along their travel journey by powering them with an FX travel cards that will guarantee to user the best FX rates all around their trip and their holiday. So I wanted to basically, walk you through those two examples and to really highlight how important it was to, identify that key problem within your user journey if you want to basically meet success with your embedded finance product bet. The last thing I wanted to, talk about is, if today you're exploring, an embedded finance play, you will often have to ask yourself the question, should I build these things myself or should I partner with someone? And that's the third point that I wanted to address as I had to go through that myself at Uber and at Booking.com. Partner is your fastest way to market. When you think about, having your embedded finance play, whereas it's co-branded debit card issuing, whereas it's microloans, loans, or insurance, you will basically really figure out that a lot of things needs to be sorted. One, regulation. Do I have a license in order to be able to offer those products? Two, what are all the functionalities that I need to build in order to have a great product experience for my user? If you just think about issuing co-branded debit card, for example, you need to think about applying for a co-branded debit card and passing credit score check, having an entire view about your balance and your transaction history, being able to freeze your card, change the PIN code of your card, etc., etc., etc. And even if you are a big company like Uber, Booking, or any other big marketplace, this will take months or years to build, even with all the resources you have. Given the fact that you will probably not have any chance before you build everything to, release that product to market and be able to learn from it. So by partnering, you are able to go faster to market by leveraging someone else's license, for example, a bank. And you are often able to basically leverage third-party capabilities, such as, for example, a white label app or an external application that might be able to give yourself the ability to only build part of the functionality on your side, on your own experience, because you want to control that, and offloading the rest to that third-party provider, allowing you to go faster to market, invest less resources, and basically being able to define your exit criteria and when you have reached product market fit. So by partnering, you will go faster to market, but you will trade some user experience pieces. For example, if like at Uber, you decided to own the co-branded debit card application flow, the credit score assessment, and the transaction history management, but you don't own, let's say, freezing the card, blocking the card, changing the PIN code or whatsoever. Your user have to download separate applications or have to go to separate interface in order to be able to do all those actions. And therefore, that's a trade-off in the user experience. But that's allow you to test, not invest a lot of resources, and ensure that you have real value and you get real benefit from it before investing even more. The second one is build. And that's often a play that you see after companies have reached product market fit. When you have reached product market fit, when you have understand that this financial offering inside your customer journey is actually adding value, it's actually moving the needle, you can basically decide to internalize more and more capabilities inside your own experience. By cutting, let's say, a third-party provider, whereas it's a bank, whereas it's a BaaS provider or whatsoever, you are able to better control the economics. So in the long run, it's become more interesting for you to build all those capabilities and internal all those capabilities, especially if you need to do that at scale in a lot of markets, etc., in order to ensure that you can get the best ROI on this financial product play. But again, on the other side, and the main drawback of this will be that you have to dedicate a lot of resources. To give you an example, the initial co-branded card project at Uber started in 2016 and I think got revamped last year in 2022. And we still, and Uber don't still have all the functionality in their app for drivers. So if it takes more than 6 years for Uber to be able to internalize that entire experience, imagine if you're a startup or if you are a medium business, how long that might take you. That's what I wanted to wrap up with. And maybe I just wanted to leave you, with 3 key points. The first one is 3 key players, on the embedded finance ecosystem and space. You have the bank providing the regulatory framework, the BaaS provider being the technology provider that bridge the gap between the banks and the retailer, which are really basically, the consumer provider and basically providing all the consumers to that ecosystem. The second one is customer need first. So there is a lot of trends today and trendy word and buzzword within FinTech, and I mentioned some of them, embedded finance is one of them. What's important is if you want to think about a play on embedded finance, think about which customer problem adding a financial product offer in my customer journey might help solving. And that's really the angle that you need to have if you want to reach success with your financial product offering. Last but not least, partner before product market fit. It's allow you to go faster to markets, and it's allow you to really de-risk. In terms of investments, you will put less resources up front, and that will allow you to basically test and learn without committing too much from a resources perspective. And that's it. Thanks a lot.
Romain, thank you so much. Some great examples and some wonderful advice. I'll just jump to a quick question from our audience. This is from Susan. How do you think that the current economic downturn will affect the types of embedded finances that thrive?
How do I think? Can you repeat the question? Sorry.
How do you think that the current economic downturn will affect the types of embedded finance that will thrive?
I'm not, I don't think the macroeconomic will impact too much the sector. I think credit score might be a bit, more tricky, or banks might look a bit into more details about that. But if you've seen what happened, in the last 5 years, the macroeconomic world, drastically changed during COVID time. But in that time, there has been more and more fintech play, than I think between the 20 years before. So I don't think this will really impact, let's say, fintechs or embedded finance. I think the biggest shift I see, in the next, let's say, 5 to 10 years for embedded finance is, I think in the last 10 years, embedded finance ecosystem have been structuring itself with, bank, BaaS, and the big retailers, and especially the big marketplace. And I think what will happen in the future is that small and medium businesses will start accessing embedded finance way more than before. So I think we will move from a world where, BaaS providers tend to work mainly with like big marketplace and big providers to they're going to start making their offering available to more and more basically small and medium businesses. And therefore you're going to end up, probably whenever you are looking to buy a house, your rental agent or, your house agent is going to end up like, oh, you want to sign this house? Actually, listen, I'm providing the mortgage directly myself. I'm partnering with this bank, and I'm actually offering you to not have to do the entire mortgage, due diligence across a zillion banks. I'm going to ensure you that you have a seamless experience. So I'm ensuring that more and more small and medium businesses will be able to have this embedded finance play. I think this is where the future is going for embedded finance.
Okay. Romain Berthome from Booking.com, thank you so much for your time and thank you for joining us here at FinTech Live New York.
Thank you. Have a great day.
Thank you.